Hello and welcome to this special edition of What's Hot. It's a marquee deal. Ford is considering the sale of two of its European marquees or brands, Land Rover and Jaguar. One's a sturdy SUV business, the other sells cars that dreams are made of. Both are reputed brands, and though Land Rover is not doing so badly, Jaguar is struggling financially. Nonetheless, the two brands that are being sold together have attracted lots of interest from private equity players such as Cerberus, Blackstone and Apollo to Indian auto companies such as Tata Motors and Mahindra. Tonight on this special edition of What's Hot, we're going to discuss two broad themes. What are Land Rover and Jaguar worth and what's in it for a buyer? And the second theme, what could the potential acquisition strategies be? Joining me to examine these various possible twists and turns that this deal may go through are Phil LeBeau from CNBC US in Detroit right now, Rebecca Lindley, auto analyst with Global Insight, Sarwan Singh, partner at Frost & Sullivan, Hormuz Sarabji, editor of Autocar, and our very own Samantra Barua and Raji Rajeshwari in the newsroom right here in CNBC TV 18. Let me start off with Phil LeBeau because he's the man in the thick of things. Phil, good numbers coming in from Ford after 7 straight quarters of loss, a quarter that's done pretty well. Will this make Ford more aggressive on the negotiating table now when it comes to Land Rover and Jaguar?
I don't think they'll be more aggressive. I think they've already made a decision. In fact, in a conference call just a few minutes ago, CEO Alan Mulally said, listen, we've pretty much decided that we're going to sell Land Rover and Jaguar. So that train has left the station. The question now is what price and who is the ultimate buyer of those two brands. So I don't know if they'll be more aggressive. They definitely, though, do plan on selling those two brands.
We understand that the condition may be that both brands will be sold together, and there's likely conditions about plant shutdowns and employee layoffs as well. Did you hear anything from Alan Mulally on that?
He's not commenting on any of the conditions that might go along with the sale, but I have talked with private equity investors in New York City who are looking at potentially buying these two brands, and they all have said the same thing, that when a deal gets structured with Ford, Ford is going to require that Jaguar and Land Rover go as a package deal together. And keep in mind, there's so much excess capacity, particularly on the Jaguar side, that part of what they're going to have to work out is the capacity shutdown and bringing those down in England. Now, that's going to be a sticky situation to work out, but that's all going to be part of the deal when this ultimately takes place.
All right. So, Phil, how would you assess the value of these two brands in terms of the production facilities they have, the technology they have, and ultimately what the value of this deal could possibly be?
Well, let's talk about the value, because I've heard estimates all over the place from a couple of billion to $4 billion, especially if you look at Volvo, which many believe could go for about $5 billion. But that's a varying estimate, and I have talked to some people on Wall Street who have said, listen, I even think $3 billion is a little rich for these two automakers together. One of the things you have to keep in mind is that Land Rover, while it is essentially break-even, slightly positive, that's the value in this deal. Jaguar is a money-losing operation. It is not running up to capacity. And on the cost side, it's going to be a real drag on whoever buys this combination of Land Rover and Jaguar. But Jaguar does have going for itself the fact that it has incredible brand name recognition, something that someone could leverage, and if it's run properly, it's a real diamond in the rough. The key is you've got to strip out a lot of the excess capacity. You've got to shine this automobile operation up considerably. There's a lot of potential there. The key is whether or not you can extract that potential over the next couple of years.
All right, Phil, stay in there with us. Let me get another voice into this debate. Rebecca, what do you think the value is likely to be when this deal is finally decided? A couple of $1 billion or more than that, and what's in it for the buyer finally? Rebecca? Well, technology trouble. We seem to have lost her, so let me get Hormuz in. Hormuz, we are going to discuss bidding strategies in just a bit, but from your assessment, outside perspective, what do you think the value in this acquisition could likely be?
Well, it's really hard to say. I mean, there are a lot of numbers being thrown up, but I think clearly I wouldn't be able to put a value to it. But it's not just the value which is the point over here. It's a company like Jaguar, because that's going to take billions to fix, 300 million pound loss, around 4,500 loss per car. So it's really going to need a sort of automotive sugar daddy to give it components across which are cheap, and it can really wean down development costs, especially since the volumes are so low. So really, my issue is really beyond the purchase price. It's really what it's going to cost to fix the company.
All right, we have Rebecca back on the line, so let me pose that question to her again. Rebecca, where do you think the value in this deal is going to lie for the buyer? What can buyers potentially do with these two brands to actually make the most of this transaction?
Well, I think that, both of them are iconic brands. Land Rover even more so. The problem with Jaguar right now is that there's so little direction in terms of, are they going to go, really very much away from the iconic type of Jaguar, or are they going to try and go retro and do something really, fabulous with a Stingray type of Jag? So there's a lot of direction that needs to be given to Jaguar, whereas Land Rover really is very, very solid right now. They have some really nice product.
We've seen a couple of luxury brands being sold over the past few years, Lamborghini for one, Aston Martin more recently. How have these sales or these transactions fared? Have buyers been able to make much of these brands finally? Rebecca?
I'm sorry, I didn't realize it was directed to me. Well, it takes a long time to really start making money when you buy a company like, depending upon what it is, like when you look at Aston Martin. But it makes sense for some of these larger companies to divest these very luxury-oriented brands because they need to look at core businesses. Like Ford needs to look at a core business of Ford brand and make that stronger. And these smaller luxury brands tend to be more distraction than anything, and they also tend to not make a lot of money necessarily or add a lot. You can't oftentimes share platforms and suppliers because they are so high-end that you can't really put the same parts into a Ford as you can into an Aston Martin or a Jag.
All right, Phil LeBeau, let me come back to you in terms of the challenges facing a buyer in trying to buy both these brands and turn them around. Trouble with labor unions, ability to shut down production lines, to be able to cut costs. What do you see the challenges will be?
I think those are both a couple of challenges, and an even bigger one that it might happen for Mahindra or for Tata. It's the technology component. More and more on the luxury end of the market, you have got to bring more technology into these vehicles, and that costs money. Now, for a company like Ford or for General Motors, they can soak up that cost, and that's the advantage when you would have these luxury lines, that you can say, listen, if it's going to cost a little extra for the latest technology in this vehicle, we can put it in there, offset it with the economies of scale. If you're a smaller automaker or if you're private equity, that's going to cost you more and it's going to cut into your profit margins. So Tata and Mahindra, they're big enough that they can soak up that technology cost, but that's one of the main challenges, because in this day and age, if you are building a luxury automobile, you have got to come in with the latest technology. And we're not just talking the bells and whistles that the people see when they're driving a car. We're talking about the bells and whistles under the hood. That's really where the value is expected in these high-end automobiles.
Well, Phil, thank you for bringing that point up, because that's exactly what we're going to get to in just a few seconds after this commercial break, where the M&M and Tata can actually afford being able to turn these brands around. But more importantly, what are the likely bidding strategies to be in this transaction? Will it be a private equity player that could race ahead of any auto company? We're going to take a very short break and come back with all these analysts and more.